What's up, guys? Welcome back to the channel. Welcome back. It's your boy Jay. Shout out to all my subs. We finally hit 1,000 subscribers on this channel. Woo! Thank you all. It took me about 9 months, but appreciate the guys and girls that subscribed a long time ago and still stuck with me, and my journey and stuff like that. That means a lot to me, so really appreciate it. I'm gonna continue to bring you guys content that I think is important, and what I mean by that is content that's helping me in my trading to think about things, and expect it to be on the more risk management side of trading now lately than the technical analysis part of it, because you don't need me for a strategy. Okay, that's not what you're missing in your trading. What you need is to control your risk, and because this is a game of probabilities. So that's kind of what this video is about, but it's some chart work in here too, so stick with me. I think you'll enjoy it. Okay, so let me start with a story. I recently had a friend of mine, really good friend of mine. Her and her husband built the house. They were in a house that they already had, and they had a kid, and they wanted to expand their family, and they needed a bigger house or whatever. She wanted one, so they built a bigger house. Their financial situation, it was good enough to afford the house, but she was worried about losing her job or his job, because their new mortgage would be substantially more than their current one, because it was a newer house and they were building it from the ground up. And so if anything were to happen to one of their incomes, it would be a bad outcome, basically, right? It would be a bad thing. Whereas if they stayed in the house they were at, if something happened to one of their incomes, they could, they would be able to adjust quickly. You know what I'm saying? They wouldn't have to really change the way they were living, maybe for, 6 months to a year. He or she could find another job and kind of, but in this new situation, if one of them lost their income, it's going to be catastrophic, right? So they went ahead with the deal, closed on the house and everything. But before all that, she had that anxiety about the job situation. Companies were downsizing. You had, and she's in a tech company. I won't say which one, but tech companies were downsizing, cutting 10,000 employees here and there. Microsoft, Google, everybody was cutting employees, right? So she was worried, like, shit, did I buy a house at exactly the time I could lose my job? So she had really the problem that we're going to talk about now. She had a trade-off between the risk and the probability of something favorable happening to her. Okay? And what I mean by that is there's always situations, and we do this in everyday life all the time. There's always situations where we could make a lot of money, but the risk that we have to put on to make that amount of money is low, favorable to the outcome. Think of like a bank robbery, right? The risk is high. And the outcome of a favorable, the probability of a favorable outcome is low, because you're probably going to get caught or killed or something in a bank robbery. The risk is high, okay, but the probability of a favorable outcome is low. So you'd be here on the outcome scale and you'd be here on the risk scale. Okay, don't rob banks, obviously, right? The probability of her or her spouse losing her job was low, in my opinion. She's good at her job. She's specialized, so not a lot of people can do it. It's necessary. They need it. It's not just something like, experimental that they're trying. They need this department and what she does. And her husband's had his job for like 20 some years. So his probability of losing his job, the risk was really low. But combined, and this is important for later, so listen, combined, they probably have a medium probability. So together, one person might have a low probability of something bad happening, and one person might have a high probability of something bad happening. But if you combine them together, if either of these outcomes happen, the high probability or the low probability, if either of them happen, the probability of the entire situation, which is them losing their house and not being able to pay their bills, that becomes high probability. Does that make sense? So you really just combine their probabilities together. One's high, one's low, and you have a medium probability. So it's enough to be worried about, is what I'm saying. Okay, I think you guys get it. So the thing about this is, In trading, you have all of these different scenarios that you're presented with every day. You and I, when we trade, we see the same chart. Okay, everyone around the world sees the same chart, and we have to make decisions based on what we're seeing that are in this matrix somewhere. Okay, they're somewhere in this matrix, and our goal as traders is to avoid these scenarios right here. Avoid them almost exclusively, where the risk is high and the probability of a favorable outcome is low. Okay, so that means we're risking a lot, and the trade probably from the beginning wasn't a good setup, wasn't going to work out anyway. This is where people spend a good majority of their time. Okay, when you look at charts and you take these trades, you're setting yourself up for unfavorable outcomes. Okay, you're setting yourself up to blow up your account, to hate trading, to suck at it. I would hate trading if I never won. Okay, being a losing, just a terrible trader, every time I press a button I lose, that's the easiest thing, because then I'll say it's rigged, I can never get anything right. But the lure of it is, because it's a probability game, even sometimes when you take these high probability, low outcome trade, or low high risk, low probability trades, sometimes they work out. Okay, and sometimes they work out in multiple batches. Sometimes you can take these all day and you'll just keep winning and winning and winning. And you'll be like, oh, okay, this works. This, trading breakouts works. Even though 80% of breakouts fail. Trading a breakout is a high risk, low probability event, because most breakouts fail. When it breaks out, it's probably going to come back into the range. But the ones that work out have the chance to go so much further with the right risk management. You can make breakout trading work for you. I know a really good breakout trader. But if I were just trading breakouts all the time and they always worked out for me, the time that it doesn't work out for me, I'm going to hold and hold and hold, not control my risk, and I'm going to blow up, right? So we're always in this matrix here. We're always around this area, okay? You want to avoid these trades, okay? You want to take these trades here selectively, your low probability but also low risk, because low probability, low risk, okay, this probably won't work out, but what is it going to cost me to find out, right? It's not a great trade, it's not a terrible trade, it's just an okay trade. That's this one, that's this guy here, okay? You could take these trades over and over and over again, get many of those trades out of the way until one of them maybe turns into a higher probability trade. So you have the ability to take something like this and have it move here. Okay, and what you have to understand about this, how I'm looking at it in my mind, is no matter where you are on this, the trade is constantly changing. Okay, as you move more into profit, say you have a 10-point profit target. Once you move 5 points into profit, okay, if you haven't moved your stop and you have if you have a stop that's 10 points, you're now risking 15 points to win 5. Because you have the 10 points that you initially were risking, and then you have the 5 points that you have just to win the other 5. Okay, so now you're upside down. So what you have to do is you have to raise your stop. You have to bring your stop up to make it more advantageous as far as probabilities go. And that's what people don't understand. It changes in the trade as you go up to 6 points in profit, 7 points, 8 points, 9 points. Once you go to 9 points in profit, if your stop is still at your original stop, you're risking 19 points to win 1. That's not smart. Even if you're at break even though, you're risking 9 points to win 1. You're going to say, okay, I need 1 more point and I'm out of this trade. Are you going to let it really drop 9 points to hit you out at break even just to take that 1 point? Probably not. You probably should move your stop up to around 5 or 6. Let's risk 3 points or something to win 1, or 2 points to win 1, right? Let's make it make sense. I'm always saying it. Make it make sense. Like, we're gonna go to the chart now. We're gonna see how these outcomes, how you field outcomes when you trade, and how to think about it. Because the more you can put yourself in these situations and trade more along here, maybe occasionally these, maybe occasionally this box here or this here. You just want to not trade in here, and then this here. We're going to discuss what that looks like, okay? And I'm going to leave that for last because that's important. But so the red one is never traded. You never want to trade these really, okay? You want to sometimes trade these, Okay, medium risk, medium probability, that means it's 50-50. Most of the time the market's mainly balanced anyway, right? So you could put on a little bit more risk than you usually do, and it has a slight chance of working out. Maybe sometimes you take those trades. This was almost red for me though, but I know in my own trading, I'll play around with this a little bit. But these trades here, where the risk is medium risk and it's a high probability situation, I want to take those trades more often than not. And of course, what we all want is the low probability, low risk, high probability trade. So let's go to the chart and see what these look like, okay? All right, guys, so let's take a look at this chart right here. On this chart, I've labeled some trades in different probabilities from the matrix that we just came from, okay?